Hey everyone, today we're going to tackle one of the most powerful and, let's be honest, one of the most intimidating indicators you'll ever see on a trading chart, the Ichimoku Cloud.
I know what you're thinking when you look at this. It looks like a chaotic web of lines, just a complete mess, right? But what if I told you this isn't noise? It's actually a complete, self-contained trading system designed to give you a full picture of the market. Our goal today is simple, to turn all this confusion into total clarity.
And here's the secret. The indicator's full name, Ichimoku Kinko Hyo, literally means one-look equilibrium chart. It was built from the ground up to help a trader see trend, momentum, support, and resistance, all of it in a single glance. No extra indicators needed.
So to understand the whole system, we've got to start with its engine room. And that's these two main lines that are constantly gauging the market's momentum. These are the fastest moving parts of the whole indicator.
First up, you've got the conversion line, or Tenkan-sen. Now, all it is the midpoint of the highs and lows from the last 9 trading periods. Just think of this as the fast lane of the indicator. It really hugs the price action closely, and it's going to be the very first to react to any short-term shifts in momentum.
And then we have its partner, the baseline, or Kijun-sen. It uses the exact same calculation, but over a longer 26-period time frame. So if the conversion line is the fast lane, this is the slow lane. It represents the market's medium-term balance point, or its equilibrium. Fun fact, that 26-period setting isn't random. It historically represented the number of trading days in a standard Japanese business month.
So to put them side by side, you have the fast Tenkan-sen acting like a sprinter, and the slower Kijun-sen acting more like a marathon runner. Their relationship is absolutely crucial, because when these two interact, well, that's when we get our first key trading signals.
And this interaction works just like a classic moving average crossover. When the fast line, that's our conversion line, crosses above the slow baseline, it's a signal that bullish momentum is building, and, you guessed it, when it crosses below, it's signaling bearish pressure is taking over. It's a really simple, direct, and powerful signal.
Okay, now for the part everyone recognizes, the most famous part of the indicator, the cloud itself, also known as the Kumo. This is what gives us the bigger picture, the overall trend, and, believe it or not, even a glimpse into the future.
So what exactly is this cloud? Well, it's just the space between two other lines, leading span A and leading span B. Span A is basically the average of our two momentum lines, the conversion and base lines, so it's the faster edge of the cloud. Span B is the midpoint of the last 52 periods. Think 2 trading months, which makes it the slower, more stable boundary.
But here's the magic trick. The entire cloud, this whole Kumo, is actually plotted 26 periods into the future. This is what makes Ichimoku a leading indicator, not a lagging one. It's literally projecting a forecast of potential support and resistance zones before the price even gets there. Pretty cool, huh?
So how do we use it? Honestly, it's incredibly intuitive. If the current price is trading above the cloud, the overall trend is bullish. Simple. If it's trading below the cloud, the trend is bearish. And what if the price is trapped inside the cloud? Well, that tells us the market is choppy, directionless, or just consolidating. The cloud's thickness also tells a really important story. I like to think of it as a river of trend. A wide, thick cloud suggests a strong, established trend with major support or resistance. On the other hand, a thin, narrow cloud represents a weaker area that could be broken through a lot more easily.
Okay, we've broken down the engine and we've explored the cloud. Now let's reassemble the whole thing and see how all these components work together to create really high-probability, context-aware trading signals.
And this brings us to what is maybe the most crucial point. Context is everything. Remember that bullish crossover signal we talked about earlier? Well, it's far, far more reliable when it happens above the cloud, because that confirms you're trading with the dominant uptrend. The same exact logic applies to bearish signals. You want to see them happen below the cloud.
The system also gives us more frequent entry signals for when you're in a strong trend. You can watch for the price itself to interact with that baseline, the Kijun-sen. For example, in a clear uptrend, a temporary little dip below the baseline followed by a cross back above can be a fantastic signal to jump back into the move.
And finally, there's one last piece of the puzzle, the lagging span, or Chikou span. Now, this is simply the current closing price, but it's plotted 26 periods in the past. Just think of it as a final confirmation filter. If today's price, when you look at it from the past, is free and clear of old price action, it confirms the strength of the current move.
So let's boil all this down into an actionable checklist you can actually use.
This is where that whole idea of one look really comes to life.
Just think of this as your pre-flight checklist. For a really strong bullish view, you want to see a whole sequence of events. Price moves above the cloud, the future cloud is green, and then you look for a momentum trigger, like price or the conversion line crossing above the baseline. And of course, the bearish case is just the exact opposite.
Ultimately, the real power of Ichimoku isn't in any single line or any one crossover. It's in their confluence. It's about getting multiple components to all agree with each other, confirming that the short-term momentum is perfectly aligned with the long-term trend.
So we're left with a final question, right? Does this all-in-one chart really provide the ultimate clarity it promises, or is simplicity truly a trader's best friend? That's something every single trader has to decide for themselves. Thanks for joining me on this deep dive.